Hello, today is Thursday, February 11th, 2021. I'm Joe Schmidt from TC2, and this is Staying Connected. In late October, we did a podcast discussing the Gartner Telecom Expense Management, or the TEM, as Telecom Expense Management is abbreviated, is the TEM market guide from Gartner. And we gave you our viewpoint on this industry based pretty much on the work that we do for our clients. Today, we are back to discuss our outlook on TEM services in 2021. I'm joined by my fellow TC2 director, Theresa Knutson, and Steve Rosen, who is a partner at LB3. Both Theresa and Steve have done a ton of work in the TEM space, and I am thrilled to have them with me today. So, Theresa, let's start with you. What is the outlook for 2021 in the TEM space?
Hey, Joe, it's great to be back on Staying Connected. The telecom expense management considerations for 2021 have definitely evolved. And while the global player list in the TEM space has really steadied over the last couple of years, your needs from a TEM supplier have likely expanded and evolved. And we'll talk about some of those areas that you might see those needs. So traditionally, people think about TEM and you think about services related to wireline and wireless network services. So you want invoice receipt, processing, payment, auditing, inventory, and reporting from a supplier. But now your network services are expanding, and you might want those same controlled or internal controls type services over a broader range of things like maintenance, cloud-based services, Internet of Things, and even as a subscription-based services. And oftentimes people want that scope of services from one global supplier. So visibility and understanding are key for IT services. You need to know your contract details, you need to know how you use those services, and then be able to correlate those two back to how you are billed for those services. So you want to make sure you're realizing the cost savings that were promised by the adoption of a technology or through a contract negotiation.
Yeah, you are right, Theresa. You really do have to understand the billing and the nuances of how the services are used to know if it makes sense. Likely companies don't have that expertise in-house or the bandwidth within the team to focus on it. So, Theresa, I also understand that there are now a couple of new acronyms in the space. CEM, or Cloud Expense Management, and I guess a slight enhancement of TEM, which used to be just Telecom Expense Management, but now I understand it's rebranded as Technology Expense Management.
Yeah, I suspect those definitions will be in the next revision of the Newton's Telecom Dictionary, so keep your eye out for that. But, to kind of recap what we talked about in October, in the Gartner TEM Market Guide, there are really 6 global players. And I'm going to talk about those in alphabetical order. And those are AssignNet, Claro-MDSL, CAS, NTT, SACON, and Tango. And I'm going to talk about it in relationship to some research that I did on all 6 of these suppliers' websites to find out what they're doing in this expanded scope of services space. So CEM, TEM, kind of the definitions that we talked about. So what's really interesting, I'm going to talk about each of the 6 briefly, and then we'll have some comments at the end. But when I looked at the AssignNet specific portal, they have, or on their website, they have information about UCaaS. So it's kind of a focus that they have, things like Microsoft Teams, Skype, Office 365, Microsoft Azure. So that's one of the areas that they focus on their website, in addition to basic services related to wireless and wireline services. When I looked at the Claro MDSL websites, plural, because even those 2 companies really combined over a year ago, they still have 2 separate websites. And they have a slightly different spin on each of those websites as to their focus. But the Claro site really focuses on cloud and data center facility charges. And the MDSL site has some information about technology expense management. So really covering cloud, IT asset management, Internet of Things, and they even mention kind of old-fashioned call accounting. When I looked at the CAS portal, they have a lot of information about cloud asset management services, things for services covering like AWS, Azure, Google, GCP on their website. And they even quote some savings statistics of 30 to 60% savings for companies that pull these services under their management. So CAS also has a recent white paper out about their trends that they're tracking for 2021. And one of them that was interesting was what they call BYON, which is bring your own network, and making sure you're managing those costs as your employees are working remotely. NTT, slightly different spin. They really had a focus on the Internet of Things, lifecycle management, and really didn't touch on much else that I could find quickly there. So that was their focus. SACON, really their website is a lot heavy focus on wireline and wireless, but they did have some added information about helping you go through the network transformation lifecycle, things like SD-WAN, UCaaS, and 5G. And Tango really, again, focused on wireline and wireless, but also mentioned a bit on cloud on their website. So they offer advice on cloud lifecycle management, cost allocations, ways to identify cost savings opportunities.
That's interesting. That's lots of different spins and focuses from those providers. And you know this, Steve knows this. TEM is definitely on people's minds these days. We've had tons of requests from several large companies interested in either reviewing their current TEM relationship or looking to expand their current TEM environment to encompass really more than just the wireline and wireless spend of old.
Yeah, I'm seeing that same kind of volume of requests coming in. And CIOs always ask me why telecom spend and network spend is so hard for companies to manage. And it really comes down to this basic thing that the service providers make it so because their invoices are either incredibly detailed. Everyone has seen those 1,000-page invoices, or they're so sketchy in detail. Like you might get an invoice that just says monthly charge. It has no service address on it, has no detail. So the service providers make it hard to understand based on, which spectrum of the billing that they're on, either too detailed or not detailed enough. And the new spend areas such as cloud-based services or subscription as a service invoices are the same. So you really need to have an experienced person who knows the services, knows the contracts, and understands the pricing nuances so they can correlate that back to the invoices.
Yep, I understand that. You need a TEM subject matter expert. But with so many service charges and so much garbage being sent on the billing, and of course, the clock is always ticking to get those invoices processed and paid, companies probably just give up and hire a TEM provider. That's probably why the TEM industry keeps growing. Hey, so Steve, what can companies do to build some type of protection into their TEM deals and give them some contractual flexibility?
Thanks, Joe. There's a number of ways that customers can maintain their contractual flexibility in their dealings with TEM providers. First, customers should include ascertainable measures of quality, otherwise known as SLAs, in their TEM contract. These quality metrics might include the obligations to apply the correct contract rates, to timely pay invoices, and to timely update the circuit and equipment inventories. The customer would then have the right to either full termination for cause, or even more importantly, partial termination for cause, for example, by service or by region, if the TEM provider consistently misses its SLA targets. Second, the contract should be structured as a single master services agreement with statements of work for different regions and different services, and the SOWs themselves should be terminable for poor performance as measured against the SLAs. Service by service and region by region SOWs are effective because billing platforms, payment methods, and dispute procedures vary by service and by region. And by allowing for SOW by SOW termination, the customer can signal its dissatisfaction with poor TEM performance by service and region without blowing up the entire deal and leaving itself with no TEM coverage at all.
So, Steve, I've seen that M&A and business unit divestiture, it's a big deal with companies right now. So what should companies be thinking about if they're going through some type of change like that?
Great question, Joe. If your enterprise is in a state of flux due to mergers and acquisitions and uncertainty in the marketplace for your goods or services, common themes these days, there are a few contractual clauses that you should ask for. First, affiliates and acquisitions should be allowed to purchase under your enterprise's agreement. Second, if you spin off an entity, there should be a pro rata reduction in charges. And finally, while it is admittedly difficult to get a business downturn clause with any teeth, if your enterprise can get some reduction in charges in the event of a bona fide business downturn, that would be quite helpful.
All right, thanks for that, Steve. Okay, Theresa, if a company wants to understand how much a TEM solution is going to cost, they should do a competitive procurement or at least some type of price discovery, right?
Yeah, definitely. And if you're looking to expand the expense management services to more than just wireline and wireless, definitely seek out some pricing quotes from a couple of providers. If you have an incumbent, get one from them, but also maybe one other one, just to understand how these services for this expanded group of things, like we talked about cloud, Internet of Things type services, how they're being priced, because it's maybe not in the same model or method as they do for wireline and wireless. So The other thing to note is if you have a really strong relationship with your incumbent TEM provider, and if your IT team knows how to use that tool, there's really a strong case to use your incumbent to cover that expanded scope of services so that your team has one place to go for all information related to the costs that they're responsible for.
In my experience, the devil is always in the detail, and buying TEM services is no different. Companies really need to sort out what's special about their requirements and what might be a standard offering from the TEM provider.
You hit the nail on the head, Joe. While every deal should be tailored to the customer's unique needs, there are a number of contractual clauses that should also be common to all TEM deals. First, the limitations of liability should be reasonable, mutual, and carve out indemnification, infringement, and breach of confidentiality obligations by the TEM provider. Second, the customer should be indemnified for third-party claims and any IP infringement, and should have full IP rights in all deliverables, including reports, recommendations, etc. And third, both parties should be required to comply with all federal, state, and local laws and regulations and protect the other party's confidential information. While certainly not an exhaustive list, these clauses represent a good start from the customer's point of view.
Okay, Theresa, do you have any closing thoughts?
Sure. I just got a couple. Keep in mind that providers don't make their billing easy to understand. And with complex billing, or maybe sketchy, lacking of detail billing, and complex contracts that you have for these services, there's always room for error. And oftentimes, cost management falls on the same shoulders of the IT team who's responsible to implement and support these technologies once they're installed. And rightfully, these teams are focusing on making sure that things are working properly, and that's a priority. Cost management often falls to the sidelines. So I highly recommend that companies either dedicate resources to help manage their network spend or have partner relationships like with a TEM to help monitor that spend, as these numbers can get really, really large. So it's a worthwhile investment to focus on cost management.
Okay, good stuff. Thanks, guys. As you just heard, the TEM industry is pretty dynamic, and there is a lot to consider if you're thinking about making some type of change in 2021. So if you would like to talk about this with Theresa, Steve, me, or any of our LB3 and TC2 colleagues, you can give us a call or send us an email. You can also stay up to date by subscribing to Staying Connected, by checking out our websites, and by following us on LinkedIn.